Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 24th, 2025, we're diving deep into Microsoft, ticker Microsoft, a stock that's been consistently in the headlines, reflecting its pivotal role in the tech sector and the broader market's focus on artificial intelligence. Recent news indicates a strong bullish sentiment, primarily driven by Microsoft's robust artificial intelligence initiatives and cloud strength. Analyst consensus points to a strong buy, with average price targets around $552, and some even raising their targets to $585 or $600. This optimism stems from the belief that Microsoft's AI advancements, particularly with Copilot and Azure, will continue to drive above consensus earnings. The company also recently announced a quarterly dividend, which is always a positive signal for long-term investors, demonstrating investor confidence in the company's financial health and future growth prospects. However, it's not all clear skies. There are cautionary tales. Some analysts warn that the current AI frenzy could lead to a market crash more severe than the dot-com bubble, a macro concern for all tech stocks. Microsoft is also facing a VAT claim appeal in Italy and has dealt with SharePoint security breaches. While not directly impacting fundamentals, these highlights the growing scrutiny on large tech companies globally. Mark your calendars, because July 30th is a key date as Microsoft's earnings report is just around the corner, which is a critical event that could dramatically shift market perception and MSFT's price. Now, let's turn our attention to the charts to see how these fundamental narratives align with price action. On the daily chart, looking back from March 2024 to today, we can clearly see Microsoft has been in a sustained, strong uptrend. This long-term bullish channel has been defined by a consistent pattern of higher lows and strong upward momentum. However, there was a notable pullback around April 2025, hitting a low of $344.79, which also happens to be its 52-week low. This level served as a critical support, indicating a significant buying interest and forming a strong base that analysts might refer to as a strong accumulation zone. The bounce from this $344.79 level was quite powerful, with a massive green candle on April 9th, indicating a strong reversal. Since then, Microsoft has surged, consistently making higher highs and higher lows. The current price is around $505.87, very close to its 52-week high of $514.64, which acts as immediate resistance. Breaking above $514.64 would be a very bullish signal, potentially opening the door to the analyst targets of $550 to $600. Conversely, if we look at previous highs around the $490 to $500 mark from late June, these levels could now act as potential support if the price pulls back. The overall volume trend has been healthy during the rallies, but also higher during some of the significant dips, suggesting profit-taking or strong selling pressure at those times. The overall trajectory is clearly upward, suggesting significant underlying strength in the company's fundamentals. A sustained breakthrough beyond $514.64 could signal the next major leg up, as investor enthusiasm for AI continues to drive capital into the sector. Zooming into the hourly chart for a closer look at recent price action, specifically focusing on the period from July 21st to July 23rd, we observe increased short-term volatility. This particular period illustrates how rapidly sentiment can shift, even within an established uptrend. After trading in a relatively tight range around $509 to $511 on July 21st, Microsoft saw a noticeable dip on July 22nd, falling from above $509 to around $505. This suggests some short-term profit-taking or increased selling pressure. On July 23rd, the stock opened around $506.75, moved slightly higher, but then experienced a sharper decline to roughly $500.70 before a rebound. This confirms the slight weakness seen on the daily chart's red candle. The $500 to $502 area appears to have acted as immediate intraday support, with buying stepping in around these levels. The stock then recovered to close near $505.87 on the daily, but the hourly shows the intraday swings. The recent price action indicates a battle between buyers and sellers around the $505 to $510 range. The increased volume during the dips indicates that while some were selling, others were actively stepping in to buy, suggesting a contested area. It's crucial to monitor these intraday battles as they often precede larger moves on the daily timeframe. Shifting to the 15-minute chart provides even more granular detail on July 23 RD's price movements, especially during the trading session. We can see a clear drop during the early and mid-afternoon, breaking below the $505 support that seemed to hold on the hourly chart earlier in the week. This confirms a short-term reversal, potentially due to market jitters ahead of earnings or broader macro concerns like the AI frenzy warnings. The sheer volume accompanying this sudden downward move suggests significant institutional activity or a strong reaction to unforeseen news, highlighting the importance of real-time monitoring. The low reached on July 23 around $500.70 is significant as it aligns with the lower bound of what we identified as immediate hourly support. This specific price point around $500.70 has been retested multiple times since the large April rebound, making it a critical psychological and technical barrier. The quick bounce from this level demonstrates resilient buying at that specific price point. For short-term traders, this $500.70 level now becomes a crucial immediate support to watch. A break below this could signal further downside in the very short term. Conversely, a sustained move back above $505 and then $510 would indicate bullish momentum regaining control. A failure to hold $500.70 on higher volume would strongly suggest further downside momentum, potentially targeting the prior resistance turn support around $490. Always remember to observe volume alongside price action. Higher volume on breakouts or breakdowns adds conviction to the move. So, what does this all mean for Microsoft in the short and long term? Reasons to be bullish include Microsoft's leading position in the AI race, strong analyst confidence, and its consistent financial performance driven by cloud services. Microsoft's massive ecosystem, encompassing cloud services, enterprise software, and now cutting-edge AI, provides a deep moat against competitors. The bounce from the $344.79 low demonstrates strong underlying demand. The stock's ability to recover strongly after the April 2025 dip also speaks to its resilience and investor conviction in its long-term vision. Long-term investors might see any dips as opportunities to accumulate, given the strong buy ratings and high price targets. Reasons to be bearish or cautious include the broader market, AI frenzy warning, potential regulatory or legal challenges like the Italy VAT case, and cybersecurity concerns with SharePoint. In the short term, the recent slight pullback from new highs could indicate some exhaustion or profit-taking before earnings. For traders, entry points for long positions could be scaled in around the $500 to $502 range, with a strict stop-loss set below the $498 mark to manage downside risk effectively. For those considering short positions, the $514 to $515 zone offers a clear resistance point, with a tight stop-loss just above it to mitigate potential breakout losses. The upcoming earnings report on July 30th will be a major catalyst, potentially causing large swings in either direction, so adjust your risk accordingly. To recap the important price levels, the ultimate long-term support is around $344 to $350, where we saw a significant rebound. Immediate strong support for the current uptrend is roughly $490 to $500, a level that previously acted as resistance and now should act as support. The intraday support around $500.70 is crucial for short-term movements. On the resistance side, the 52-week high of $514.64 is the immediate hurdle. Looking ahead, The next significant resistance to overcome is the all-time high of $514.64. Beyond that, analyst targets suggest potential resistance zones at $552, $585, and even $600. An unbiased prediction suggests Microsoft is more likely to test and break above $514.64 in the coming weeks, especially if its earnings report on July 30th beats expectations, reinforcing the AI narrative. The price action around this level in the days leading up to July 30th will be particularly telling. However, a miss on earnings or any negative forward guidance could see Microsoft swiftly retest the $490 to $500 support range and potentially even trigger a deeper correction towards $475, the low end of analyst targets. Look for increased volume on any significant price movements for confirmation, as this adds conviction. Monitoring the overall market sentiment, particularly around the AI sector, is also crucial, as broader concerns could impact even strong performers like Microsoft. Thank you for joining Explain the Charts, and happy trading!